Good morning, everybody, to the Fractal Effects live stream. We are live Tuesday, Wednesday, and Thursdays from 10:30 to 11:30 and possibly till noon, depending on what the market analysis is. Please make sure you read the disclosure and understand the risk. Keep in mind, Fractal Effects is for educational purposes only, so if you're following along with us, make sure you're doing a demo account. This is not financial advice, and we are not financial advisors. So let's jump on to the charts. So we had some news drop at 7 o'clock, or sorry, 10 o'clock today. We have a downside expansion model. We got NAS on the left. We got ES on the right, otherwise known as US 500. Now remember, today is Thursday, so today on Thursdays usually the footprint is more of a retracement back to Tuesday's range, which is outlined by our indicator right here in the aqua. And it looks like it's heading in that direction. I'm sure we're going to get confirmation, or maybe even a retracement before we get a confirmation. This thing's been dropping. Let's make sure we're looking at it on the 5-minute. Looks like we might get that confirmation. Ideally, what we want to see is a bearish confirmation, retracement, and an extension right into Tuesday's range, possibly even previous day low. We're getting close to a confirmation. 2 minutes 57 seconds left on this candle. One minute 45 seconds left. Let's hope this confirmation sticks. We might be able to get an early move. We do have a lot of breakaway fair value gaps right here. Another good indication that this thing wants to push down. So we did not get a confirmation. That's the range that we're going to be focusing on today. Yes, slowly it looks like it's giving us a confirmation. We got 7 seconds left. 3, 2, 1. Still above. Maybe with this next candle. This might be our confirmation. Hoping to get an early confirmation. Retracement back into the range, hopefully into this fair value gap. We have a couple of overlapping fair value gaps. There's London fair value gap in green. And then we have New York fair value gap, a pretty big fair value gap right there, also in green. And it's sitting right in the golden zone, with our target being the aqua line. Let's hope this one sticks and then gives us a retracement. Three minutes, 13 seconds left of this candle. This is our target right here, between these two aqua lines. This is Tuesday's range, painted out by the indicator. Remember, Thursday's footprint, it retraces back into Tuesday's range. All these concepts and how the indicator works is all taught on the back end in the Learning Hub, fractaleffects.com. Please check us out. Make sure you subscribe, get your notifications so you know when we're on live. 2 minutes, 29 seconds left. We want to get that confirmation quick. Yes, pushing down. We'll most likely get a confirmation on the yes. One minute, 51 seconds left. One minute left. It's retracing back into the range. We want to get a confirmation here first. Let's see if ES gives us that confirmation. 52 seconds. 10 seconds left. Could still get a confirmation on this candle, which is what we want to see. Excuse me. There you go. Okay, we got our confirmation, bearish confirmation, downside expansion model. These are our targets. Now we want to see a retracement back into the range, into the golden zone. Make sure you move your fib levels. You want to make sure the range is accurate. Remember, the indicator already paints out the range for you. You just got to drop a fib on it. Now we want to see a nice retracement. There's a couple of fair value gaps here. Maybe the 20 EMA and this fair value gap. It's a shallow retracement. If it's a deeper retracement, then it most likely might be the New York fair value gap, 61%. Remember, there's no FOMO in the way we trade. We're probability traders. We wait for the market to come exactly where we want it to come. We want to see it at least get over this 50%. Then we know we're in sell territory. We have all the EMAs up here. We have a lot of fair value gaps here. We want to see a retracement. We want to see gesticulation happening, rejection happening, wicks happening. And that'll be a telltale sign that this thing wants to push down and again into the aqua and possibly even further into previous day's low. We're patiently waiting. Even if we have a bias, we're going to hit those aqua lines. We don't jump in here. We wait for a retracement. There's no FOMO. It's always going to give us an opportunity. And again, if it takes off without us, that's fine too. We're only looking for one successful trade a week. One successful trade a week at 1 to 3 risk to reward ratio is 12% a month. If you're doing it right, that's compounded. So we don't have to worry. We want to see it retrace back into one of our PD arrays here. Ideally, we want to get above the 50, back into sell territory. Remember, when you're bearish, PD arrays flip. This becomes the discount. This becomes the premium. For selling, we want to sell up here at a higher price. If you're buying, you want to buy at a discounted price. Still pushing down. No real retracement yet. Remember, this thing has to look obvious, as mentioned before. I want to see wicks on the 5-minute. You want to see it bouncing off of one specific zone. Still pushing down. No retracement yet. I'm going to fix this. This is actually, so previous day's low is actually down further. Closer to that. Close to Tuesday's range, top of. Again, we're just patiently waiting for that retracement. Now we can see a rejection as soon as it hits that aqua line. Remember, look for telltale signs. Anytime it gets close to a specific PD array and then rejects before touching it, there's a stronger probability that it's actually going to come back and hit it. That's why we'd like to see a retracement before it enters that that aqua range. But again, we want to see proper rejection. As mentioned before, it has to look obvious before we enter. Remember, the algorithm that controls the market, it's not only playing psychology with you, it's playing reverse psychology. So it knows you're aiming for those PD arrays. That's why it stops just short of it, pulls back, and then it can continue, like on, for example, Fridays. A lot more traps are set up on Fridays. And it knows you want to hit those PD arrays, and then it'll just stop short of it, turn back around. So we want to see a proper retracement, proper rejection. So right now there's a small fair value gap right here. But ideally we want to see it at least hit the range. Range is marked out right here. Let's drop our fib. Make sure all of our measurements are accurate. Don't be afraid to zoom in, make sure. Remember, this is math. You want to make sure your numbers are accurate. Slowly getting a retracement now. Now the golden zone slowly dropped, getting closer to this fair value gap. There's another small fair value gap in between here. Remember, the indicator paints it all out for you. There's a fair value gap right here. Closing in on 11 o'clock. Depending on what your trading setup is, remember, you want to be looking at the same chart but on multiple time frames. Although you guys can't see it, I have multiple screens in front of me. I'm looking at it on the 1 minute, waiting to see if it hits this 20 EMA, rejects off the 50. I'm looking at it on the 15 minute. We're right at that 238. Remember, this is fractals. That's why we're called fractal effects. We're looking at multiple time frames. Whatever happens on a smaller scale happens on a bigger scale, and vice versa. This algorithm is elegant. It's happening on multiple time frames. And that's what we use for confluence. So we're right at the 238, which is another place that it could just reject. It's down here, but we're below the 238, another sign that we're bearish, the 15. We want to see some good rejection here now. want to see at least 3 candles rejecting off of a key zone. This is a tiny, tiny fair value gap. It's a good indication. That one's even smaller. I'm not interested in it. I like to see it, again, retrace a little higher. On the 1 minute, we are close to the 20 EMA, but still under it. Ideally, I like to get a rejection off of 19726. Sorry, 19276. Right around here. Let's just drop it there. I want to see a rejection right around this area. But I want to see proper candles, wicking candles. Closing in on 11 o'clock. Now again, at any point it takes off without us, that's fine too. There are times where the market doesn't want to let you in. The reason we wait for price to come back into fair value gaps is because that's exactly what it is. It's a fair value gap. They're allowing fair value, meaning if you didn't get in and the market pushed down, they're allowing the market to come back up so people can get back in at those points. They have to deliver fair value. On ES, we've already hit the aqua line. We got one candle rejection, second candle. I want to see it sweep a little higher, hit this zone. On the 1 minute, we never touched the 20 EMA. There are no important PD arrays that this thing is bouncing off of quite yet. So again, if it leaves without us, then it leaves without us. It didn't leave any telltale signs that it was an optimal entry for us. No point in getting FOMO here. We want to wait till it enters the zones that we have outlined. We wait for the market to come to us. That's how you prevent FOMO. That's how you prevent chasing it or having a bad risk to reward ratio. So we have a downside expansion model. We have a bearish range. We have a bearish confirmation. We already have targets set. Now we're just waiting for a proper retracement. This in my mind is not a proper retracement. I'm not happy with this. Our goal is to be in a trade within 1 hour of the range formation, which is roughly 11:30 Eastern Standard Time. ES now digging into that Tuesday range. NAS finally hit it. Still driving. We're also hitting a higher time frame PD array. There's a 4-hour fair value gap in here. We're definitely going to see rejection there. Now it's just hovering around the aqua line. Driving. Now we're hitting that 4-hour PD array, the consequence encroachment. We'll most likely see some rejection here. It's digging into that bigger fair value gap, deeper into the Tuesday range. We still have this as a target. We still have previous day's low marked out by the yellow. Still moving down our fib. Still would like to see a retracement back into this area. On the 1 minute, we never did touch the 20 EMA. Now we should start seeing some rejection off this higher time frame fair value gap. Still waiting patiently. Remember, if you're doing it right, it should feel like you're watching paint dry. You want to make sure you get a good entry, and then you follow it. Managing your position properly, moving up your stop losses. Looks like we're getting that rejection off that higher time frame fair value gap. Still at that consequence encroachment of that higher time frame fair value gap. We should see some kind of rejection happening here. Still driving lower. Leaving a fair value gap here. This thing is, excuse me, this thing has not had a proper pullback yet. We're waiting for a proper retracement. For 11 o'clock. Let's hope that we get that retracement in the next 21 minutes. And it's as simple as that. Again, if you're not in a trade 1 hour after the range formation, you're done for the day. You don't want to jump into a trade going into the lunch hour. No more scouring the markets hoping to find potential trade. You know the exact time now. It's the whole point of algorithmic trading. Check us out on fractaleffects.com. You can check out on the back end the dashboard. We have all specific aggregate relating to every asset, time frames, most likely when those retracements will happen, when those confirmations will happen, when those extensions will happen. This is all an algorithm. Algorithms repeat. Slowly getting a Projection now. Let's see if that sticks. On the 1 minute, we're slowly pulling back towards the 20 EMA. Remember, the range itself is now a point of interest as well. It could bounce off of the aqua. So the 1 minute, we're slowly coming back up to the 20 EMA, which is overlapping with the top of the range, the aqua line. Slowly eking its way back up to the top of the range. Still just patiently waiting. We do have a fair value gap right at the aqua line, just Tuesday's range. Now ideally we'd like to see it retrace higher, again into our zone. Even on the 1 minute we are close to the 20 EMA, we haven't quite touched it. I'd like to see it maybe touch the aqua line. If we start seeing gesticulation here, rejections, this might be a good entry to go short. Our stop loss would be, again, 2 ticks above top of this. Here's a small range. You want to make sure there's room as well before jumping into a trade. Just because you know what's going to happen doesn't mean that it's still going to be profitable. This one's tight. There's really no room there. Let's see what it looks like when we take it to the previous day's low. Be at 5.29. Let's see if we get a better entry. Minutes to 11:30. Okay, we're starting to get some rejection. This might be a good point. We're getting rejection on the 1 minute off the 20 EMA and off the aqua line. It's the first candle that crossed over into the fair value gap. It's a 3-candle formation. This one came up short. Just a little short. First candle projection. 13 seconds left. We want to see at least one more candle. I think it wants to pull up a little bit more. This is where most people get FOMO. Again, just stay patient. Maybe a little bit more confluence. But we do have very important zone right here. This is Tuesday's range, the aqua line. We have a fair value gap in here. We are hitting the 20 EMA on the lower time frame. Three minutes left in the candle. Two minutes, 30 seconds left. On the 1 minute, we are dancing right at that 20 EMA. But we are under it. Two minutes left in the candle close. This could be the move. This candle closes under it. This would be a move. Forty seconds left. Candle close. On the 1 minute, it's coming back up to that 20 EMA, testing it one more time. Again, I would have preferred it come back up to here. We have one candle rejection, 2, 3. And this one's slowly coming up to the 20 again. On the 1 minute. This is one of those moves that might be slow though. A lot of gesticulation. Hitting the 20 EMA, I want to see if it rejects the 20 EMA on the 1 minute. Keep in mind, we're also in a higher time frame fair value gap. Like literally right there. So it's pressed up against two different PD arrays. That's why we're being careful here. On the 1 minute, let's see if it rejects off the 20 EMA. So it closed over the 20 EMA. The 50 EMA is coming down slowly further. 3 minutes left. This candle. I think it still wants to wick this 20. But 1, 2, 3 candles. Probabilities are high. We're also rejecting off of the aqua line. The only thing is your stops would have to be up here, meaning with the earliest take profit. Roughly around there. These things are always hard to get to the exact thing. So 1 to 3. There you go, 1 to 3. 1 minute 52 seconds left. On the 1 minute, we are below the 20. We are rejecting off the consequence encroachment of that 4-hour fair value gap, and we're bouncing off of the Aqua Tuesdays range. Anytime we're sitting in a higher time frame PD array, I usually proceed with caution. Make sure I move up my stop losses immediately to break even. Market is also engineering new liquidity here. Again, since it's sitting in a higher time frame PD array, people are expecting to go long. And since it's bumping up against the consequence encroachment and all these other PD arrays that we mentioned, people are going in short. So it's collecting positions, creating positions on both sides. Slowly starting to get some movement to the downside. Let's see if it takes out. So it's taken out, almost taken out the lows. We're sitting at 11:30 now. But now we're going to watch it. Now we want to see this thing pushed down. The 1 minute coming back up to the 20 EMA. Tapping that 20 EMA right now in the 1 minute. Still tapping that 20 EMA on the 1 minute. Just trying to see where 1 to 2 would be. Because once we get to 1 to 2, you want to move your stop losses to break even and take some off the table. It's roughly around there. But ideally, we'd like to see this thing just drive since it's not that big of a range. We're at 11:35. Would love to see a displacement candle right now. Just a push down. We've already taken out previous lows. Yes, driving even closer to the bottom of that range, Tuesday's range. Want to see it hit it. push through. Bit of a slow crawl. And this is why it's important to manage your positions. Could bounce off of this and head higher. That's why we right around. We're checking down here, but most likely right at the aqua is where I would take some off the table, some profits off the table, and move stop loss to break even. Just don't like this kind of slow motion moving. Wow, very slow. Usually it consolidates and takes its time, but once it's broken, I should say, a low, you usually do see displacement happening, or at least a little bit faster than this. So again, goal is to protect our position once we hit this aqua line, as there could be some reversal there with an overall target of 1 to 3 down here. Slowly driving, very slow. slowly moving down. Now remember, if you're in a trade and you're closing in on noon and you're in profit, it's better to take that profit. Some people like to manage their position, just trail a stop, but it's not worth it. Why take the risk? As mentioned before, the lunch hour brings with it more of an erratic algorithm. ES already hit the bottom of that range, so this will most likely follow in suit. And protect your position here. Move stop losses to break even, take some off the table. Again, the market likes to do this. It tries your patience. Remember, it's not just psychology, it's reverse psychology. Some people think that it might not even hit that, and then they jump out. Some people don't even know about this range. Remember, our indicator is painting this range. Some people are completely oblivious to the fact that there's a range that Thursday retraces into. That there's a higher probability that Thursday will retrace into. So now we are officially in a safe trade. We have taken some off the table. We have moved our stop losses to break even, and we are waiting for the TP. And at any point, if we get closer to noon, I would suggest closing the trade. As mentioned before, this is a zone where we could see rejection as we have hit the bottom, just like we hit the top and rejected. We can also reject off the bottom. Ideally, we'd like to see it push through. ES is slowly starting to reject. NAS is starting to reject. It was a bit of a weird range. I do see it going a little further though. I don't like to be in too many higher time frame PD arrays, sitting in higher time frame fair value gaps. Now that all the targets are set, we will most likely conclude the session in the next 10 minutes. As mentioned before, downside expansion model. We had a red box, bearish confirmation, retracement back into the aqua, which was Tuesday's, bounce off of a fair value gap, off of a smaller time frame EMA, and an extension. Stop losses after hitting 1 to 2. Stop losses were moved to break even. Some money was taken off the table. 1 to 3 risk to reward ratio. And now we're at another rejection point. I believe it'll push through here, but yes, already has. Just to play it safe. Risk management and money management is where most people fall short. They get into great trades, but they don't take any off the table. They don't move up their stop losses. Then eventually it turns on them. Now they're in a deficit when they should have been at a break even or in profit. Makes no sense. You have to make sure you're also managing your risk and you're managing your position at all times. sure we're going to see a lot of gesticulation. Could even be pull back, then a drop. About 13 minutes off, noon. So as mentioned before, I think we'll conclude this session early, probably in the next 5 minutes. So the downside expansion model, as we saw, usually what happens is if we have a downside expansion model, New York usually goes against it and then follows in suit. But you want to make sure all the telltale signs are there. We had a downside confirmation. Although we didn't have a false day since this move happened after the session, this became then the overall driver for the down move. Let's get rid of some of this stuff. Remember the takeaway from today, make sure you're watching whatever pair it is, whatever asset it is, whatever indice, you want to make sure you're watching it on multiple time frames for confluence purposes. You want to watch it on the 1 minute, the 5 minute, and the 15. And then the 1 hour, 4 hour, and daily, that's more or less for swing trading, but we do have higher time frame PD arrays that we do mark out. And we'll go into more of that most likely next week. Today is Thursday, so we will not be live tomorrow. Yes, already driving through. They were equally as weak. They both took out the highs. I'd like to see a candle just push through. But again, this is a very important rejection point here. Most likely it might even head to, if we break past this zone, we'll be heading to previous day's lows. Yes, already below now, below the aqua line, Tuesday's range, even rejecting a little bit off of it. Remember, once you get into a safe trade, meaning you've already broken or you've moved your stop losses to break even, you've taken some profit off the table, it's best to just walk away. It either hits your TP or it hits your break even and you have profit for the day. Otherwise, you can close your position here, or before noon, I should say, how people manage their risk. It's going to be specific to the individual. Obviously, we want to make sure that for every trade that we take, we are trying to do a 1 to 3. Otherwise, there's no point. If you close your trades purposely early, you're not really even going for the 3. It was never a 1 to 3. It was always going to be a 1 to 2 or a 1 to 1.8. But as mentioned before, we will be concluding this session since all the parameters are set. Thanks for joining us. We will be live next Tuesday, Wednesdays, and Thursdays from 10:30 to 11:30, possibly noon. Please check us out on fractaleffects.com, where we teach all of this. We have our algorithmic dashboard, we have our indicator, we have our learning hub where we go over each one of these moves, advanced entries, etc. Make sure you hit the subscribe button, turn on the notification so you know when we're live. Hope you guys have a great weekend and enjoy the rest of your day. Take care.